Hello, good morning. Can we hear me? Can you hear me? If you can hear me and you can see my screen, kindly type in hi in the comment section so that we can get it started. I'm not sure what's happening with my sound quality here. I'm just trying to do some settings. So let's confirm that you can hear me and you can see my screen by typing hi in the comment section. Okay, good morning everyone. I can see 603. Kindly confirm you can hear me, please. I'm not sure if my audio is coming out at all because I can't hear myself. Okay, I think it's better now. So let's confirm that we are good to go this morning. If you can see my screen and you can hear my voice clearly, type in hi in the comment section, please. All right, so 679, is that a confirmation that you can hear me? Francesco, good morning to you. Thank you very much. All right, I would want to assume that we are good to go this morning. So if there are any issues, just let me know as we kickstart. All right, so I'm so excited to welcome you all to yet another promising session on the Extreme Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I shall be your host as we take a technical dissection of the current market structure to make a decision and position ourselves in such a way that we can catch any potential trading opportunity lining up for us today. And for those who are joining us for the first time, I'm so glad and excited to have you around. So you guys are welcome on board. So what we simply do here on the daily basis is to gather here as a family, evaluate the financial market. We have a couple of pairs that we have been monitoring since the beginning of the week. So we are going to be looking at how well these pairs are doing and then position ourselves in anticipation of the New York session. Initially, it might look a little bit complicated, but I assure you with time, you get to understand how this works and you will be able to use this information you have gathered here to make your own independent decision. So once again, I welcome you on the board. With that being said, let's dive into the business. So normally the first thing we do here is to ensure that we keep tabs with the fundamental perspective in the market. And as a result of this, we want to be looking at the economic calendar as we do have series of macroeconomic events to look forward to today. And in fact, I will be saying that today is likely going to be a huge one for us as we have today jam-packed with series of macroeconomic events. And if we look at what has been happening in the market before now, we would have observed that investors and traders have stepped aside from this market in preparation or in anticipation of the Federal Reserve policy announcement and the first chairman's press conference coming up today, which is a big changer in the market. Everyone is looking forward to what the rate hike is going to be like. Is it going to be a 25 basis point or a 50 basis point hike? So these are things that we have been contemplating on, but there is this tendency of a 25 basis point hike. So with that being said here, let's quickly run through what to look out for today. So we already have the consumer price index, which is an indicator of the inflation data for the pound sterling. And as you can see here, we had a positive figure coming in at 10.4% compared to the previous data of 10.1%. You can see that we have a positive variance of 2.63, which is quite a positive tone for the pound sterling. And in the last 4 or 5 hours now, we've been seeing some bullish traction in favor of the pound. So we shall be looking at that and how to anticipate trading opportunities on that pair. Then also later on today, we have the Fed's interest rate decision coming up. This is coming up in about 6-7 hours from now. We are looking forward to that one too as well. So there is a consensus of 5% here. That's a 25 basis points difference. We hope that it will remain the same, and if it goes beyond expectation, we shall be looking at the market and how we want to be anticipating any of these possibilities. Then we also have the monetary policy statement coming up that same time, the FOMC economic projection, interest rate projection too as well, and then the FOMC press conference. So these are high impact events that everyone in the market will be looking forward to, and definitely and obviously we shall be seeing the reflection of this anticipation on the chart as price action. So join me as we scale into the market structures to identify trading opportunities by dissecting the current market structure. So the first commodity we are going to be looking at as usual is the US oil. And so far so good, the US oil has been quite profitable for us on this chart, as this is the 1 hour time frame right now. And looking at the structure here, if you remember, yesterday we had the first buy position for the week triggered at the breakout of the $67.50 level. Let's go a little bit let's go back into how the week started here so that we can have a better perspective into what is really going on here. So at the beginning of the week, we initially identified the simple structure here where price action was trading between the $67.50 level. So that was the point where price action started this week. Then we saw price action drop into the support line at the $65 level. And you all know what we look out for whenever we have this kind of channel. We want to see price action either break out of the channel or breakdown of the channel for trading opportunities. So with a buy stop and sell stop order placed respectively at both the resistance line and the support line here, we had the breakout of the support line triggered during the course of yesterday's morning's trading session, and since then price action has been finding higher lows and higher highs. Then during the live session yesterday, I told us all that we also want to be anticipating an additional position to our existing trade at the breakout of the $68.50 level, which appeared to have happened here as we saw the breakout retest of that structure. And for those who have been part of all these positions we have taken advantage of since yesterday, well done to you guys for being on standby to have caught this move, as you will currently be running with the first position will be running with about 160 pips in profit, and the second position will be running with about 80 pips in profit. So well done guys for being on standby to catch this move. Now the next thing we want to be doing here as usual is to ensure that we secure this position by moving our stop loss accordingly to protect this position against any sudden pullback that might likely happen. And with the current structure here, I will be suggesting that we move our stop loss to somewhere right above the $68.50 level. Let's give room for price action to breathe in the anticipation of a trend continuation to the upside. And if you remember what I told you yesterday about the current market structure here on the 1 hour time frame, we laid emphasis on the importance of this bullish trend line, which has been supporting the bullish momentum since the beginning of this week. When we connected the series of higher lows here, we were able to identify this bullish trend line. As you can see here, price action has consistently respected that trend line, which further emphasizes the strength of the buyers in this market. However, if we look at what has been happening on this chart in the last 8 hours or 10 hours or so, I think 7 hours I guess, we can see how price action has fallen into a consolidation phase between the $69.40 level and the $69 area. And you would agree with me that we are at a critical point in this market right now, as a consolidation phase just exactly around the bullish trend line is something that we want to be focusing on to understand what is really going on around that area, so that we can position ourselves in such a way that we can be part of that momentum that will be springing out from this channel in the nearest future. And you all know what we look out for whenever we have this kind of setup. We want to see price action either break out of the channel to the upside, that is the breakout of the $69.40 level for buying opportunities, or a breakdown of the $69 area for selling opportunities. And at this point in time, the possibilities of either of this price movement is very, very likely, as we are sitting on the bullish trend line, which makes this area a little bit more significant at this point in time, as we could see the buy pressure continue in such a way that price action respect the bullish trend line one more time to incite another wave of bullish momentum, leading to another breakout of the $70 level. And we could have a situation where the bullish trend line will be breached to the downside, where selling pressure below the structure will definitely be welcoming a sell-off in this market. So these are the things we are going to be looking at today. But before we go into the detail on a much more lower time frame to see what is really going on around that area, I would like us to look at the higher time frame so that we can have an holistic point of view of what is really going on in this market. Then we come back onto the lower time frame to make a decision for today. And for the sake of those who are not part of our previous session, you will be able to be on the same page with us as well. So scaling up into the daily time frame here, let's quickly run through the daily time frame to see what our expectations are, what we saw at the beginning of the week that made us to have bought the USOil. Now, this is the daily time frame here, and if you look at the daily time frame, the first thing we observed on the daily time frame is the fact that price action has been bearish for the last 8 to 10 months. And to further buttress the importance of the sellers in this market, we connected a series of lower highs here, which gave us that resultant bearish trend line you can see on your screen. However, things got a little bit interesting during the month of November. I think we started seeing price action do a consolidation phase trapped within the $83 area, which was serving as a strong supply zone, an area which negated all attempt by the buyers to continue to the upside here. Then the support line here at the demand zone at the $70 area was also an area which served as a demand zone for over 4 months before we finally saw the breakdown of that structure during last week's trading session. And since the breakdown happened, we saw our price action tested the $65 level, which we later identified on the weekly time frame as a very important structure in this market. So for the sake of clarity, let's look at the weekly time frame so that we can really have a better understanding into what is really going on this chart. So this is the weekly time frame here, and talking about the $65 level, you will see that if we look at this and go to as far back as 2005, you will see how the $65 level at one point in time being a supply and a demand zone at one point in time. This gives us a clue into the potency of this price level, where it has been serving as a major determinant of price movement. Now, in addition to that $65 level here, I was also able to identify a bullish trend line after going to as far back as 2016. Connecting the series of higher lows here, we had this bullish trend line figured out. Though we had a breakdown of the structure here, price action climbed above that level during the month of March of 2021, and since then price action has remained above that bullish trend line. Now, if we zoom into the current structure in this market, that is, if we zoom into what has been happening here in the last couple of weeks, following the breakdown of that $70 level we identified on the daily time frame, you will see that as soon as price got into that $65 area, we begin to see buy pressure resume around that area. And since the beginning of this week as well, we have been seeing buy pressure, giving us a bullish sort of looking candle here, which we can conclude yet because this candle is still running and still have about 2 days. It still has about 2 days, 12 hours to go on this one. Now, what I want to call our attention to around the structure is the fact that the $65 level and this bullish trend line identified on the weekly time frame shares a beautiful confluence, making the current structure we are right now a critical one. Hence, we need to really understand what is really going on around this area to be able to make a decision for this week. Now, with the situation we have here, there is a possibility that if we continue to see buy pressure continue above the $65 level, we might see a situation where price will find the bullish momentum and begin another wave to the upside. And one thing about the bullish momentum based on this current market structure, I would like to zoom this in a little bit so that we can see what I'm talking about here. So one thing about the bullish pressure in this market is this. Remember that during the course of last week's trading session, we saw how the bearish engulfing candle here broke through two key structures in this market. One is the $70 level, which was the platform for that demand zone, which lasted for about 4 to 5 months. Then we had the breakdown of this bullish trend line, which supported the higher lows we identified on the daily time frame. Now, you all know from a technical standpoint, whenever we have a significant breakdown of a structure like this, we expect that one point in time price is likely going to come back and do a retest of that structure. It could be the $70 level in this case scenario, or probably the bullish trend line which was identified earlier to incite another wave of bearish momentum. So that is one possibility we shall also be taking into consideration while we continue to enjoy the bullish momentum here. So we want to be very, very careful as soon as price gets into the $70 area to see how price action reacts with that structure to determine if we are going to be adding more position to our existing buy position, or we're going to be getting ready to join a trend continuation to the downside. So that is one. And if price action breaks out of the $70 level, we want to see how price action will be reacting to this trend line to determine if we are going to be adding more buy position to our existing buy positions, or we want to be getting ready to join a decline to the downside. So that is that on the bullish expectation on this chart. And for this week, we're still going to be holding a bullish bias as long as price remain above the $65 level, and it depends on how price action reacts to the structure, and the structure that will determine what our next line of action will be. However, if we do have a breakdown of the $65 level, then definitely we want to be looking out for selling opportunities in this market, as a breakdown of the $65 level, which also shares a confluence with that bullish trend line we identified earlier on the weekly time frame, will be an opportunity to join that decline to the downside. So these are the things we started looking out for at the beginning of the week, but the appearance of buy pressure above the $65 level made us to have the buy position we have running at this particular point in time. And recall, I told us all to secure all the current buy positions we have by moving our stop loss accordingly. So right now we shall be scaling back down into a much more lower time frame to see how we could take advantage of a possible trend continuation here, and at the same time how we want to be waiting to see how price action will be reacting to the $70 area to decide if we are going to be adding more position to our existing trade. And for those who had missed out on the buy pressure we took advantage of yesterday, well, we shall be looking at ways which we could look out for opportunities to join any potential trading opportunity in this market. So with that being said here, let's scale back down to our 1 hour time frame, as currently price action is trading just right around the $69.40 level. So scaling back down into the 1 hour time frame. So where were we on the 1 hour time frame? I hope you've moved your stop loss accordingly to secure your current position. And I told us all that we are going to be using this bullish trend line as a yardstick for our trading activity. So what that simply means is that as long as price remain above this bullish trend line, we shall feel comfortable in our buy position. So this is the trend line I'm talking about here. As you can see, it has been supporting that bullish momentum since the beginning of this week. So as long as price remain above that area, we shall feel comfortable in that buy position. But if a breakdown of the trend line happens, then we will be thinking or considering a momentum shift to the downside. So now with the situation of things here, I told us earlier price action is trapped within the channel right now between the $69.40 level and the $69 area, which beautifully sits right on that bullish trend line. So I'm of the opinion that price action may respect the bullish trend line one more time, considering the long-term bullish momentum so far this week, to continue to the upside And in that regard, let's scale down to a much more lower time frame, like the 50 minutes time frame, to look at the structure critically well. So now down to the 15 minutes time frame. So let's zoom in and see the current market structure right here. So since the early hours of today, we have seen our price action has been trapped between the $69.40 level and the $69 area. Now the $69 area has been, if you look at the structure here, you can see strong buying pressure around that area, which is characterized by sharp rejection of that level, further giving us a clue into the strength of the buyers in this particular market. So with the current situation here, with the buy pressure identified here, I will be leaning towards a bullish momentum for today. And in that regard, remember, we already have 2 positions running on the US oil buy positions. We have moved our stop loss accordingly, and at this point I want us to be looking out for more opportunities to buy the US oil at the breakout retest of the $69.40 level. So what we shall be doing here to buy or add more position, and for those who had missed out on the opportunities that we took advantage on the US oil so far this week, you might want to be waiting for a breakout of the $69.40 level, retest of structure, followed by buying pressure above this area to give us an opportunity to buy the US oil. So we shall be positioning ourselves right above the $69.40 level, looking out for more opportunities to confirm the bullish momentum in this market above that structure. Then we could join the rally to the upside. And as you can see, price will definitely have been on right above that bullish trend line we identified earlier. And like I said, as long as price remain above the bullish trend line, we feel comfortable in our buy position. Now, if this bullish momentum continues to the upside in such a way that price continue to find higher highs here, then remember, we have a buy stop order sitting above the $70 level, a level which was broken during the course of last week's trading session to the downside, where we shall be looking forward to more opportunities to add more position to our existing trade right above that structure. So this is what we shall be looking out for to buy the US oil for today. So I hope that we be on standby to catch this opportunity. Now, with the expectation of a bullish momentum right on the table for us today, we cannot ignore the possibilities of sellers coming in. And you all know how the financial market is very, very fluid. And as traders, to be able to be consistently profitable in the financial market, you want to be as fluid as the market. And the only way you can be fluid is by being open-minded with the possibility, with the ability to be able to shift your bias immediately the market is giving us clues in the opposite direction of whatever we are holding on to before. Now, in this kind of situation here, obviously we are looking forward to buying the US oil. But one thing we also want to take into consideration is the fact that if price action ever breaks down that bullish trend line, like I said, we want to be thinking of selling opportunities. Now that we have a structure between the $69.40 level and the $69 area, a breakdown of the structure to the downside, that is price action taking out all the buy position at the $69 area, followed by selling pressure below the structure in our lower time frame, will definitely be an opportunity to join a decline to the downside. Then if a further breakdown of the $68.50 level happens, we want to be adding more position to our existing trade. Now we have a structure below the $68.50 level, which is a $67.50 area. And if you recall what we said about the structure on the 1 hour time frame, this level has been serving as a resistance point at the beginning of the week before the breakout of that structure happened. And for clarity's sake, let's scale up into the 1 hour time frame so that you can see what I'm talking about here clearly. So this is what we saw at the beginning of the week. Remember, I told us how we had a channel between the $67.50 level, where the resistance point was here, and the support level was here. Then we saw the breakout of the structure, which triggered our first buy position for this week. And since the breakout of the structure, our price is here to come back and retest that level. So if it so happens that the $69 level is broken to the downside, there is a likelihood that price action will retrace back into structure that was broken. Obviously, we all know that from a technical standpoint, whenever price action breaks out a key structure like this, we expect that one point in time price is likely going to come back, retrace into structure, probably in anticipation of another wave of bullish momentum. So we are going to be putting this into consideration as well as we continue to monitor price action from this current structure. So like I said, if a breakdown of the channel we just identified along the bullish trend line happens, we might likely see price action drop back into the $67.50 level, which happens to be the resistance line that was broken at the beginning of the week in anticipation of another wave of bullish momentum. And if it so happens that the $67.50 level is broken to the downside, then we will have no choice than to look out for more selling opportunities in this market. So that is that on the US oil. So let's be on standby for either of these opportunities to come in so that we can be able to take advantage of this opportunity. And to make things a little bit easy for you, you would need to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. And if you need further clarification, probably there's a certain area where you think I need you to shed more light on, feel free to drop your inquiries in the comment section and I will be willing to be of help in that regard. So with that being said, here I will be moving on to the next pair. But before I go into the next pair, let's quickly run through the comment section to see if there are any questions for me before moving on to the next pair. So I will be taking the next 10 to 15 seconds to read through the chat and see if there are any questions. Then we dive into the next option. All right, so I can see Dino, thanks. Okay, you're welcome. Sam Pants, all right, good morning, Sam Pants. I hope I pronounced your name correctly there. Cast, how are you doing this morning? Good morning to you. Haki88, good morning, how are you? Susie MB, how are you doing this morning? All right, Haki88 is okay, thank you for very important. All right, you're welcome, Haki88. All right. Nishi, hi, how are you this morning? Nishi, okay, you're welcome, Nishi. Good morning to you. 983 says GBPJPY sell or buy. Well, GBPJPY is not not included in our watch list for this week. Like I said earlier, we normally have a set of instruments we choose at the beginning of the week, which is the most appropriate time to drop such pairs so that we can monitor those pairs throughout the course of the week. But I will try to see if I can attend to it if I have enough time at the end of the session. So I'll pen that down in the moment, and if there is time, I will quickly run through it within some couple of minutes. Okay, 983. All right, Aki88, I see you. All right, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving on to the next option. So the next option we shall be looking at this morning is the US tech. Now on the US tech, so far so good this week. We have been profitable on this pair, and in fact, at minimum, you should be having at least 3 positions running at this particular point in time. So let's quickly run through how the week started for us on the US tech here. So at the beginning of the week, it was a little bit choppy as we saw our price action. Hold on a second. My power just went out here. Give me a moment, please. I'm so sorry for the break in transmission. I had a short power outage, so I had to switch to my other power supply. All right, so we are good to go. Again. So as I was saying before, we on the US tech at the beginning of the week, we had a huge channel where price action consolidated within. So we had the resistance point for the week had a 12,620. This was actually where price action started. Then we saw that as soon as price got into the 12,410 level, we begin to see buy pressure resume around that area. And with the situation we had here in the at the first I think the first 24 hours of the week, we saw our price action consolidated between the 12,620 and the 12,410 level to give us an indecision in this market. Then to further help us to be able to identify trading opportunities during our Monday trading session, we added this bearish trend line here where we said after connecting the series of lower highs here, we had this bearish trend line figured out. And what we said is that if price action ever breaks down the 12,410 level, the bearish trend line is likely going to be guiding our bearish momentum to the downside. But unfortunately for the sellers, that did not happen, as we saw our price action broke out of the trend line during the later part of the New York session on Monday to give us a signal of a potential move to the upside. And you all know that since we are having the bearish trend line here as our yardstick for trading activity, a breakout retest of that structure will definitely be welcoming a buy position. And that was exactly what happened here. So we had our first buy position triggered just somewhere right above the 12,550, and with a buy stop order sitting above the resistance line of the channel at the 12,620, we had our second position triggered. So this happened a couple of hours into the New York session yesterday, and as we had two positions running at that point. Then we also mentioned the fact that breakout of the 12,675 level will be welcoming additional position to our existing trade. So right now you should be having at least 3 positions running in this market, and with a total of how many pips in profit, let's check that out. Okay, so the first position is running with about 170 pips in profit, while the second position is running with about 100 pips, and the third position here, if you join the third position, it's going to be running with about 40 pips in profit. So we have approximately 300 pips running in profit on the US tech for today. So well done to you guys for being on standby to have catch this move. For everyone who have been part of this profitable journey so far, you are well done, and kudos to you for being on standby to catch this opportunity. Now, the next thing we want to be doing, as usual, you know what we want to be doing. We want to be securing our positions right away, as we don't want to lose out on whatever we had made so far. So what we are going to be doing right now is to move our stop loss to a good level to secure this current position. And where do you think is the most appropriate area? Well, the previous structure we have here is around the 12,675, which was a strong selling niche at one point in time. And in fact, if we go to as far back as Friday trading session of last week, we saw the sharp rejection of that area. Now, with the breakout of this structure during the later part of the New York session yesterday, that was a beautiful signal of a trend continuation to the upside. So this is a structure we want to be using as a yardstick for trading activity for today. Now, with the situation we have here, our stop loss should not be anywhere, should be around or below the 12,675, so that we can give some room for price action to breed in anticipation of another wave of bullish momentum. So now that we have secured our buy position right now, what are we going to be doing next? How do we intend to be part of this move to the upside? Will the bullish momentum continue, or are we going to be having a reversal pattern anytime soon? Well, these questions will be answered within the current market structure that we have here. So the first thing I would like to say here is this. Since the beginning of the week, we have seen our price action had consistently found higher highs and higher lows, further emphasizing the strength of the buyers at this particular point in time. And to further buttress this from a structural perspective, we want to be connecting the series of higher lows here to give us a bullish trend line, which definitely we shall be using to guide trading activity for today. Now, to do this, we want to be bringing out our line chart so that we can have a specific point of connection. And in fact, with this current structure here, we might likely have a couple of trend line to buttress this structure. So the first one here should fall within this area here. So we have the first one here. We shall be doing some readjustment when we get back to our candle chart, but this is the first one here, and the second one is here. So I don't think the second one looks more valid. So the first one is valid here. So this is the first one we are going to be using. So let me give this a blue color so that we can differentiate it from the previous trend line. And then here we go. So do some readjustment after bringing back our candle chart. So when we do some readjustment, we have something like this. So this is what we shall be using going forward. So we have a beautiful bullish trend line guiding us for today. So what this simply means is that if price action continues to trade above the bullish trend line, we shall feel comfortable in our buy position. However, if the bullish trend line is broken to the downside, then we might likely be getting ready to join a sell-off in this market. So now that we have the bullish trend line figured out here, and we have a key structure here at the 12,675, which shares a beautiful confluence with our bullish trend line. So we have something to look out for to guide our trading activity for today. So as long as price remain above the bullish trend line and the 12,675 level, we want to feel comfortable in our buy position. So let's talk about the bullish expectation in this market. So with the situation of things right now, we shall be expecting a breakout of the 12,770 to add more position to our existing trade. As you can see here, during the later part of the New York session yesterday, we saw selling pressure resume just right around this area, and I'm of the opinion that for us to be able to join a bullish momentum here, we want to see price action take out all the sell positions here in the form of a breakout of that structure, followed by buying pressure above this level to further give us a confirmation to join the trend continuation to the upside. So these are ways we shall be looking forward to add more positions. So for those who had missed out on the opportunities we had since the beginning of the week, well, let's look at the breakout of the $12,770 level to welcome additional position here. In fact, I would like to bring this down a little bit here to fall within the 12,750 area, as we want to see some breakout retest of that structure around that area to give us further confirmation to join that rally to the upside here. So I will be relabeling this one as the 12,750, which more or less looks more psychological to me, considering the round figure of that price. So that is what we are going to be looking at for right now. We want to be seeing price action break out the 12,750 to further confirm that the bullish momentum is still very valid from this current market structure. Now that we have the perspective of a bullish momentum sorted out, we want to look at the possibilities of sellers coming in this market. Now, what do we want to be seeing in this market to make sure that we start thinking of selling the US tech? But before I go into the details on that one, I want us to quickly have an holistic view of what is really going on in this market by scaling up into the daily time frame to see what is really going on. Now, when we scale up into the daily time frame and look at what we identified at the beginning of the week, this is what we saw here on the daily time frame. So I'll quickly run through the whole structural perspective on this chart. And the first thing we saw here is the fact that price action has been bearish on this chart. And in fact, throughout the course of last year, price action has been finding lower highs. And to buttress the strength of the sellers in this market, we connected the series of lower highs here, which gave us this bearish trend line that you can see on your screen right now. However, things got a little bit interesting. As you can see here, we have been finding lower highs, but we didn't see any lower low, as we saw how the $11,000 area was seen as cheap enough for buyers to buy the US tech on this chart. And this buy pressure around the $11,000 level lasted for the whole of 6 to 7 months here before we finally saw the significant breakout of that structure since the beginning of this year. And since the beginning of 2023, price action has continued to find higher highs, higher lows, which led to the breakout of that bearish trend line to give us a signal that the trend line is no longer strong enough to continue to hold that selling pressure. And since the beginning of this year, we saw our price consistently respected this bullish trend line, finding higher highs and higher lows in that regard. But something happened here in the month of February. We saw the breakdown of both the $12,300 level and that bullish trend line to incite a sell-off in this market. But if we zoom into the structure here, what then you would observe is following the rejection of the 12,900 here, we saw our price action transitioned into a structure that looks more like a double bottom structure, which from a technical standpoint is a strong reversal pattern. And with the reversal pattern here identified, we have the neckline of the structure sitting at the 12,300 level, which was finally broken during the second half of last week's trading session, and since then price action has been climbing, finding higher highs in that regard. And since the beginning of this week, we're beginning to see continued buy pressure in this market. Now, if we are looking at this from a theoretical technical perspective here, we should be expecting price to do a retest of the 12,300, as those who took advantage of this momentum here will at one point want to be doing some profit taking activities, which we don't know when it's going to start, and this will be reflected on the chart as a retracement back into structure in anticipation of another wave of bullish momentum. But at this point in time, the bullish momentum still appears to be very, very strong in this market. So what we are going to be doing now is to go back into the 1 hour time frame to see how price action is reacting to that 12,750 level to decide if we are going to be buying for today or adding more position to our existing trade, or we might be seeing the beginning of that retracement phase that I said earlier back into probably the 12,300, where I said buy pressure here will be giving us an opportunity to join a trend continuation to the upside. So this is what we shall be looking at. So let's scale down to the lower time frame. Let's see how price action has been reacting to the 12,750 since the beginning of today. Now scaling down into the 1 hour time frame on this chart, this is what we were able to see here. And thank goodness we already identified the 12,750 earlier, which we saw as the resistant line. That's the second resistant line for this week. As I told you, we saw that since yesterday's New York session, we begin to see selling pressure around that area. So I already told us that we were looking for price action to break out of the 12,750 to welcome additional position to our US tech situation here. However, if the selling pressure continues here in such a way that price is unable to find a higher high, and instead we start seeing lower high here, leading to the breakdown of the 12,675 level, which I said also shares a beautiful confluence with that bullish trend line, then definitely we want to be anticipating a sell-off in this market. And if that is going to be the case, we want to be seeing selling pressure below the 12,675 on our lower time frame to be ready to join that decline to the downside. So this is what we shall be looking forward to sell, and then our TP target will be around the 12,300 level, which we identified on the daily time frame. I told you that the breakout of the 12,300 was the previous structure that we saw, and that price might likely come into that level. And at the beginning of this week, we already identified a structure around that area, which we said between the 12,280 and the $12,050 area will be most appropriate to have our TP target for any sell position in this market. Now, the sell opportunity in this market, that is, if a price ever breaks down the 12,675 level, this current structure has a tendency of giving us multiple entries. So we have structures like the 12,620, which is the resistance point for the week. So if price action drops to the downside, we want to see how price action will be reacting to the structure to determine if we are going to be adding more sell position or buying the US tech. So if a breakdown of the 12,620 happens, we want to be adding more sell position to this market. A further breakdown of the 12,410, which happens to be the support line for this week, will be definitely be welcoming additional position on the US tech for today. So let's be on standby for any of this opportunity. At this point in time, I'm still holding on to a bullish bias here. Remember, we already have 3 positions running at this particular point in time. We have moved our stop loss accordingly to secure all buy positions, and we wait out for a breakout of the 12,750 to add more position to our existing trade. But if price action breaks down the 12,675, I told us all, we shall be looking forward to selling opportunities in this market. So that is that on the US tech. If you have any questions, feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So I will be moving on to the next pair right now. So I will be checking the comment section from time to time to see if there are any questions for me. Now moving on, now we are going to be talking about the GBPUSD. And on the GBPUSD, we have been quite profitable on the GBPUSD so far this week here. And let's quickly run through how the week has started for us on the GBPUSD. Then we go into the details for today. Now the week started with a consolidation phase which lasted about 15 to 16 hours on this chart, as we saw price action trade between the 1.22100 level and the 1.21700 area to give us an indecisive phase in this market. And you all know what we look out for whenever we have this kind of setup. We want to see price action either break out of the channel to the upside for buying opportunities or break down the channel to the downside for selling opportunities. But what happened here on Monday was quite interesting. We saw the breakout retest. Even during the live session on Monday, we were able to take advantage of this bullish momentum as price action moved significantly well in our favor to the upside, moving with about 70 pips in profit before we begin to see the sell pressure resume around the 1.22850 level. We also added another position at the breakout of the 1.22450 level. That same Monday during the New York session. We added another position which also moved about 36-40 pips thereabout before that sell pressure resumed. Now during the live session yesterday, we identified the structure, and remember what I told you during the live session yesterday. We identified two key structures which we said we shall be using to guide trading activity for that day. Now one of the structure is this bullish trend line here. So we had a couple of trend lines on this chart. We had the major one here. After connecting the higher lows here, we had the major one, which is the green dotted line on your screen, the thick one I mean. Then we also had the second one, as you see here on Thursday last week. We had a deviation to that bullish momentum, hence we had this temporary bullish trend line, the lighter one on your screen right now. So we had a second one here. Now what we saw during the live session yesterday that made us to have a rethink of the current structure is the breakdown of that bullish trend line that happened prior to the live session. Then we also saw the price action slicing through the 1.22450 level with an engulfing bearish candle, which gave us a clue that there is a likelihood that price action might be going through a retracement of that previous impulse leg here. And with the situation we identified here, we said we are going to be selling just right below the 1.22450 level, have a sell stop below that structure so that we can join that decline to the downside. And this was exactly what happened 2 hours into the New York session yesterday. We saw price action drop below the 1.22450 level, confirming the sell pressure in this market. And in fact, price action moved about 65 to 70 pips in our direction before the appearance of buy pressure in this market. And for those who are taking advantage of that opportunity, well done to you guys. And I'm sure you moved your stop loss accordingly to secure your position, as you would have made some profit out of that move before the bullish momentum began. And what case scenario, it could be at break even at that point. Then remember what I told you, that whenever price action breaks down that structure to the downside, continues to the downside, we want to see how price action will be reacting to the 1.220 level, which I said shares a confluence with that bullish trend line, that is the major bullish trend line, to determine if we are going to be adding more sell position or getting ready to join a bullish momentum, as price action could actually respect that trend line one more time. And this was exactly what happened, though we had a little breakdown of that structure, which I actually joined anyways, but was taken out at break even. And the appearance of this buy pressure above the 1.2200 level was a beautiful sign to join a bullish momentum. But we needed further confirmations to happen, so we had a structure at the 1.2210 level. And I hope you are part of this move, as price action gave us multiple opportunities to be part of that bullish momentum as we begin to see buy pressure resume just above the 1.22100 level, just right above that bullish trend line, to incite another wave of bullish momentum to the upside. And if you have been part of that move from the 1.22100 level, kudos to you. as you will currently be running with about 75 pips in profit right now. And if you had bought it from the 1.2200 level here, you will be running with about 80 to 90 pips in profit at this particular point in time. So what you want to be doing right now is to secure the current position. So well done guys for being on standby to have caught that move. And I think the most appropriate area to secure the current buy position we have in the market right now is just right above the 1.22600 level or around that area, so that we can give room for price action to breathe. And remember, the bullish trend line, the major bullish trend line we identified earlier, which we said is going to be serving as a yardstick for trading activity for this week, appears to still be valid at this particular point in time, as we could have a situation where price could drop back into the 1.22600 level, which also shares a beautiful confluence with our bullish trend line in anticipation of another wave of bullish momentum. So the bullish trend line we have here still remains as our yardstick for trading activity. So as long as price remain above the bullish trend line, we shall feel comfortable in our buy position. So well done guys. I hope you have moved your stop loss, secure your current position. And for those who missed out on this opportunity, let's look at the market together and see if we are going to be having a second chance to join this potential move to the upside. Now, what are our plans for today on the GBPUSD? Well, if we look at the current market structure here, you can see that price is trading around the 1.22850 level, and for the last 3 hours now, we have been seeing some rejection around that area. And if we move left a little bit and go to as far back as the beginning of this week, you will see that we saw selling pressure resume around that area as well at that particular point in time. So right now, the buyers are really struggling around the 1.22850, hence the need to be very careful and patient to be able to understand what is really going on around that area before joining any position at this particular point in time. And because of the sell pressure identified here, I have advised us to move our stop loss to secure this current position, as we never can tell, sellers could actually take over this market and push price to the downside. So now to buy the GBPUSD around the 1.22850 level, well, for me, I want to see price action take out all the sell position here. We scale down to a much more lower time frame, like the 15 minutes time frame, to see this setup evolve. We need a breakout of that structure to happen, followed by buying pressure above this area to give us an opportunity to add more position to our existing trade. So I will be scaling down to a 50 minutes time frame in a moment, but I quickly want to touch the expectation of selling pressure around this area. Now, if selling pressure resumes around this area to the downside, we don't need to be scared or worried, as we have a bust up at the 1.22600, which also shares a confluence with our bullish trend line, where the possibilities of another bullish momentum could begin around that area, hereby respecting that bullish trend line one more time to incite another wave of bullish momentum. So the 1.22600 level also has a potential for buying power in this market, so we shall be taking that into consideration too, as well as we monitor the current market structure. However, if price action breaks down the 1.22600 level, remember that level shares a confluence with that bullish trend line. And recall that the bullish trend line here is our yardstick for trading activity for this week. So if we get the bullish trend line bridge to the downside, that is broken to the downside, then we might likely be seeing an opportunity to sell the GBPUSD. And if that is going to be the case here, remember, we are not jumping right in right away, as we want to see significant confirmation to give us a clue and confidence to join that sell momentum to the downside. So what we want to be seeing, if price action breaks down both the structure at the 1.22600 level and the bullish trend line, is to see a retracement back into structure. This will happen on our lower time frame, so we are going to be scaling down to like a 5 minutes time frame whenever price gets into that area. 5 minutes, 10 minutes or 15 minutes time frame, look out for retest of structure, selling pressure around that area, signs that buyers are losing momentum, buyers can no longer break above that structure, then we could be thinking of selling the GBPUSD. And with the breakdown of the 1.22450 level, welcome more selling opportunities in this market. In fact, this market also has a potential of giving us multiple entries on this one. So let's be on standby to catch this move when it finally happens. Now, talking about the current situation here around the 1.22850, where I said I need price action to break out, retest this level for me to be able to buy the GBPUSD at this point. So like I said, I want us to scale down to a much more lower time frame, let's say the 15 minutes time frame or the 5 minutes time frame, to look at how price action has been evolving around that area. Now, if you look at the 5 minutes time frame here, what do you see? You can see that we having a situation here that looks more like a reversal pattern in the form of a double top structure. So if we take this impulsive move into consideration here, we can see that the highest point price got into was around the 1.22975 level. We saw price drop to the downside. Price was unable to break the previous high. As you can see here, price was unable to break the previous high, hereby giving us a lower high at this particular point in time. So we have a potential reversal pattern evolving at this particular point in time. So we need further confirmation for this reversal pattern to be valid or mature for us to be thinking of selling at this particular point in time. So what we need for further confirmation is a neckline area of that reversal pattern, which we shall be identifying to sit at around the psychological level at the 1.22800 level. So for the sake of clarity, let's identify that structure. So we have the 1.22800 level we have here, and I would love to place this at the bottom right hand side of my screen. So what we want to be seeing to sell the GBPUSD is to look out for price breaking down the 1.22800 level, which happens to be the neckline of that potential reversal pattern. Retest of structure, then we could join that decline to the downside. In fact, you could have your sell stop order below that structure, then join right away. Remember, this is a very strong sell zone in this market. You saw what happened on Monday around this area. We saw sharp rejection on our 1 hour time frame, so we could have a sell stop order below the 1.22800 level so that we can join that momentum to the downside. Now, mind you, if we join this momentum to the downside, we want to ensure that as soon as price moves significantly well in our favor, we want to be moving our stop loss accordingly to secure this current position. Now, remember the bullish trend line we identified on the daily time frame. We said the trend line may also be serving as a yardstick for trading activity. So we want to see how price action will be reacting to that level to decide if we are going to be adding more sell position in this market. So if price action breaks down the trend line, break down the 1.22450 level, then we will be adding more position to our sell position in this market. So that is how we want to be selling the GBPUSD from this strong sell zone that was identified around the 1.22850 level. However, to buy around this area, we need price action to take out all the sell positions in this market, finding a new high, and in fact breaking out of the 1.22 hold on a second, let me find that out here. 22200 level, maybe 222999, I guess. So let me just put it like this: 22299. I hope I got that correctly. So I'll place it at the top right hand side of my screen here. So if price action takes out all the sell positions here, breaking out of the 1.22990 level, then definitely we want to be adding more position to our existing trade. Remember, we have the buy positions running. I told us also to move our stop loss accordingly to secure that position. So if a breakout of the 1.22990 level happens, then we should definitely be thinking of adding more position to our existing trade. So that is that on the GBPUSD. It's a very simple setup here, and I hope that we'll be on standby to catch this opportunity when it finally happens. So that is that on the GBPUSD. If you have questions, feel free to drop your inquiries in the comment section. I'm already out of time right now, and I just have to run through the XAUUSD and the CADJPY in the moment. Okay, So this is the XAUUSD here, and on the XAUUSD we have been very profitable on this pair in the last 24 hours, as we were able to scoop over 600 pips on this pair, as we had multiple entries triggered in that regard. So let's quickly run through how the week started here and what happened during the last 24 hours. Then we dive into what our expectations are for today. So during the live session yesterday, we acknowledged the fact that price was caught within this channel between the 1990 and the 1970 at the beginning of the week. Though we had a breakout of the resistance line here, which was a signal that a potential bullish momentum will be happening. But remember that breakout tested the $2,000 level, a very strong psychological level in this market, which was tested sometime in April last year. We saw sell pressure resume around that area, and it appears that we saw another sharp rejection happen this time around. But one thing interesting happened since the sharp breakdown of that structure happened. We saw how the 1985 became a strong selling niche for participants in this market. As the retracement of that breakout was unable to mature, sellers negated all attempt by the buyers to break out to continue the trend continuation to the upside, and as a result of this, we had the breakdown of that bullish trend line at the beginning of the bullish trend line that served the bullish momentum at the beginning of the week. Now, in addition to that structure here, we also considered the bullish momentum that led into that structure. Remember, I told us all how the current market structure appeared to have transitioned into a reversal pattern in the form of a head and shoulder pattern, as you can see right here, where the 19,700 is serving as the neckline of that reversal pattern. Then with the breakdown of the neckline and the bullish trend line sharing a beautiful confluence at the same area was a beautiful signal for us to sell. And during the live session yesterday, we had a sell triggered right there during our live session yesterday. I told us all to have our sell position opened just right below the 1970, and if price action breaks down the 1960, we want to be adding more position to our existing trade, and this was exactly what happened. Price continued to drop to the downside here, and remember we had this TP target for sellers identified at around the 1950 and the $1,912 area, which appears prices already within that area. And for some of us will have taken our profits already, and for those who are still having their positions running, I will suggest you have your stop loss somewhere around the 1950, as we want to see how participants in this market will be reacting to this current structure. So right now we have a consolidation phase, which more or less emphasizes the indecision in this market right now. So I was able to identify this structure on a much more cleaner chart here. So I did this on the 30 minutes time frame after seeing how participants in this market has been price has been consolidating here in the last 12 to 15 hours. So let me extend this out a little bit. So we have the 1945 and the 1936. So price action has been trapped within this range for quite a while, and it's quite obvious that majority are looking forward to a catalyst that will bring liquidity into this market to drive price movement. So as a result of this, hold on a second, where's 190? Okay, I think 1945 is around here. So the consolidation phase we have here is a sign that everyone is anticipating the events coming up later on today. We want to wait for the interest rate decision, the first chairman's conference, which is coming up later today. These are high impact event that will be bringing some liquidity into this market. So we want to be able to be part of this move when it finally happens. And you all know what we look out for whenever we have a simple setup like this. We either want to see price action break out of the channel to the upside to give us a buy position, or a breakdown of the channel to the downside to give us a selling opportunity in this market. So we should be having our orders placed at both ends with the hopes that price action will definitely move either way. And I'm very sure a breakout of this structure either way is going to be leading to a very massive move in this market. So we want to be on standby to be able to catch that move. Now, there is one thing I want to say about the buy expectations here, that is if price action breaks out of the 1945 level, please note that this is going to be a counter trend opportunity, and it might likely be a retracement of that previous impulse leg here. Remember, we had an impulse leg which broke down that bullish trend line. So if a breakout of the 1,945 happens, it's likely going to be a retracement phase. And now where the retracement phase will end is what we don't know, but we have structures that we can use to guide our trading activity. So the first structure is the 1,960. These are areas where you could place your TP target, or probably look out for to move your stop loss accordingly when price action reaches this level. Then we also have the 1,970, and we also have the 1,976 and the 1,985 area where we saw certain pressure resume yesterday. So these are areas where we can look out for selling opportunities in this market. So we have one at the 1,960, 1,970, 1,976 and the 1,985. So depending on where, if price breaks out of this structure, depending on how far it goes, we want to be looking at these levels for opportunities to join the trend continuation to the downside. So I hope that we'll be on standby to catch these opportunities. So let's dive into the last pair for today, which is the CADJPY. So let's quickly run through that and see how things have gone so far in the last 24 hours on this chart. So we shall be moving on to the 4 hours time frame, I guess, or let's run through the daily time frame so that I can show you how the week started here for us on the CADJPY. So this is what we saw at the beginning of the week, and I told us all yesterday that as long as price remain above this demand zone, we have no choice than to look out for buying opportunity. And look at what has been happening here since the beginning of the week. The last 72 hours here has continued to see buy pressure resume in this market, and I hope you are part of this bullish momentum as price action continue to the upside. So let's scale down to a much more lower time frame to see what is really going on in this market. So if you have been part of this trade, you were part of this move here. Where were we during the live session yesterday? We were around here, and we saw our price broke out of the $96.45 level. So we really have not seen any huge traction in this market. So for those who are taking advantage of this move right around the $96.45 level, you will currently be having about 52 pips running in profit at this point. So my advice here is you move your stop loss to secure this current position, and the most appropriate area to move your stop loss to is the previous structure, which is around the $96.45 level. Now that we have a signal in such a way that price appears to have broken out of the bearish trend line here, which has been supporting the bearish momentum since the beginning of the month, it's very likely that we are going to be having a bullish momentum on the CADJPY. Now remember, I told us all we should have a buy stop order above the $96.85 level, and if you truly did that, you would have had your second position triggered at this particular point in time. So with the second position triggered at the $96.85 level, you should be having your stop loss sitting somewhere around the $96.45 area, which is roughly about 40 pips at this particular point in time. So let's see how far this bullish momentum is going to go. Then we also have structures here which we can also use to add more position to our existing trade, which falls at exactly the $97.30 level. So if we have a breakout retest of that structure, we want to be adding more position to our existing trade. So let me label this one for the sake of clarity. So 97.30, okay, 97.30. All right, so we should be anticipating another breakout retest of that structure to add more position to our existing trade. So it's a simple setup we have here on the CADJPY. So I hope that we'll be on standby to catch this trading opportunity as time goes by. Then to further make things a little bit easy for us, and considering the bullish momentum since the beginning of this week, definitely we want to be connecting the series of higher lows here, after which we shall be using the bullish trend line to guide our trading activity for this week. So I would like to readjust this, and then to fit in, I think it will better we use it on the 1 hour time frame. So let's readjust it on the 1 hour time frame. Okay, beautiful, we have it figured out here. So the bullish trend line here will continue to guide our trading activity for this week. So as long as price remain above the bullish trend line, we shall be happy in our buy position. So these are my views here on the CADJPY for today. So I'm holding on a bullish bias as we head into the New York session on the CADJPY. Now I think that's the end for today here. But before I draw the curtain, let's do a quick recap of what we talked about today for the sake of those who are not part of the beginning of the live session. So the first commodity we looked at this morning is the US oil. And on the US oil, we are quite profitable here. We already had a buy position. We already had buy positions running here. We had 2 positions running already as we joined the bullish momentum above the $67.50 area just right here. Then we added another position at the $68.50 level, and we acknowledge this channel between the $69.40 area and the $69 area. And I told us all that a breakout of the $69.40 with buy pressure above this area on our lower time frame should be welcoming a buy position. And I also made mention that a breakdown of the $69 followed by sudden pressure below the structure will be welcoming a sell position in this market. So let's be on standby for all these opportunities. Then we went on to talk about the US tech, which is a profitable trade for us too, as well as we have 3 positions running with approximately 300 pips in profit at this point. And we also had this bullish trend line here, which is serving as a yardstick for trading activity. And that simply means that as long as price remain above this bullish trend line, we shall feel comfortable in our buy position. So we also had a structure identified at 12,750, which happens to be a strong selling niche in the last 12 to 15 hours in this market. So we are having a buy stop order above that area where a breakout retest of that level should be welcoming a trend continuation to the upside. Then I also said this here, that if price action finds it difficult to take out the sell positions here and finds a lower high leading to the breakdown of the bullish trend line and the 12,675 level, we shall be anticipating a sell-off in this market. So let's be on standby for these possibilities too as well. Then we went on to talk about the GBPUSD, where we have a buy position running at this particular point in time, and I told us all to secure our positions by moving our stop loss to somewhere just right around the 1.22600 level, which also shares a confluence with that bullish trend line. And we also scaled down to a much more lower time frame, like the 5 minutes time frame, where we identified a possible reversal pattern between the 1.22800 level and the 1.22900 area. So the 1.2280 level, that is the support line here, is turning out to be the neckline of that reversal pattern, and I said here that a breakdown of the 1.22800 will trigger a sell position. So we're having a sell stop order around that area, considering the fact that we are within a strong sell window in this market, as you can see what happened here at the beginning of the week. Then I told us all that we are going to, as we sell, if price action breaks down and we sell this move all the way into the 1.2260, we move our stop loss accordingly, secure our position, then wait out to see how price action reacts to the structure along the bullish trend line to decide if we are going to be adding more sell position or getting ready to join a buy move that will incite another wave of bullish momentum to the upside. Then I also told us here that if the breakdown of the 1.22800 level does not happen and instead price action breaks out of the 1.2290 level, taking out the sell pressure around this area, then we want to be adding more position to our existing trade. Then we went on to talk about the XAUUSD, where we have identified a simple channel here. This pair 2 has also been a profitable trade for us on the XAUUSD. So we already have a channel between the 1,945 and the 1,936 for selling trading opportunities in this market. And I also shared caveats here regarding the buy position, that is, if price action ever breaks out of the 1,945, we have structures like the 1,960 where price action could retrace into in anticipation of another wave of bearish momentum. We have the 1,970, we have the 1976 and the 1985. So these are levels where we need to take a closer look as soon as price gets into that area. That is if price ever breaks out of the 1944. Remember, and I told you that this will be more or less a counter trend opportunity. Then we went on to close the day with the CADJPY, which we already have a buy position triggered with about 45 pips in profit, and thank goodness we already have another position triggered at the breakout of the $96.85 level. So at this point in time, I told us all that our stop loss on all positions right now shouldn't be beyond the $96.45 level. So we still look forward to more opportunities if price action breaks out of the $97.30 level. And mind you, we have a yardstick for our guide today, which is the bullish trend line here. As you can see, since the beginning of this week, price action has continued to respect that bullish trend line, further emphasizing the strength of the buyers in this particular market. So as long as price remain above this bullish trend line, we shall feel comfortable in our buy position on the CADJPY. So on this note, I want to be calling it a day. I am very sure you guys are equipped with all the possibilities that could happen on all of the pairs that we have been monitoring since the beginning of the week. So be on standby. I hope you have screenshotted my screen so that you can use it as a reference point when you're about to make your individual decisions on this pair. And remember, we have macroeconomic events coming up today. Ensure you move your stop loss on all current positions to secure your position, as I'm very sure we are going to be seeing some volatility in the market. So let's be prepared to be part of these opportunities, and at the same time ensure that you are protecting your positions accordingly. So it has been a wonderful moment, everyone. I look forward to seeing you same time tomorrow as we come here again to review all we have talked about today and see how we can be able to take advantage of any trading opportunity tomorrow. It's 10 a.m. UTC as usual, 11 a.m. West African time, as we come here again to review and be part of this live session tomorrow. So I wish you best of luck and do have a wonderful and beautiful evening, everyone. Bye bye.